Gem International is a new diamond explorer in the richest diamond-producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109-carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for institutionaladvisors.com. Welcome back to the show, Bob.
Yeah, hi, Jim, and good morning and all of that stuff.
U.S. business optimism is at a 5-year high. Is this an honest feeling? Do they have anything to back it up?
Well, yeah, they, like various Michigan's consumer confidence number, that's not for Michigan, that's University of Michigan. And then the Conference Board consumer conference came out and it was good. Then also this week, it was the sentiment of home builders that had jumped up hugely, like 7 points or something. And so now I think the sharp increase in some of these confidence things or sentiment things are hinging on the election in the U.S., whereby you do have a dramatic change to a pro-business administration away from an administration that was an out-and-out predator on business and on the taxpayer. But in looking back, we had in June there was a terrific rally in long bonds, and it reached blow off. You know, all the upside exhaustions, everything else. So we made the call that it would quite likely be rising rates afterwards, and it was just a price item, you know. So then you came out with the end of September, ending quarter there, the third quarter. And while their calculation of GDP numbers is always suspect, it was a much better number than anything for quite a while. So then I thought, well, let's look back. So it looks like there was a wave of optimism or positivism came in starting, say, around June. And it wasn't that, the Trump election and the pro-business aspect has been sharply positive, but I think that the positive trend started in June, and that it wasn't Trump that created the positive. He was probably elected because of a change in a more positive attitude. Hey, it's hard to explain. You can't prove it or anything like that. But anyways, you have this, and so some of the coal stocks, like a month before the election, were moving. They'd been strong anyways, but they had some global coal stocks in there, but they moved, discounting the Trump win. So it's been very exciting in the marketplace, and you've had sentiment and confidence numbers jump. And for example, the Home Builders Association confidence numbers jumped sharply, but the home builder stocks not proportionately. So anyways, it's very optimistic. And then what we're, of course, interested in is what's this doing to the stock markets. And, we're getting technical excesses in the transports, in a number of them. And the banks. And one should look at Goldman Sachs. GS, that's the symbol. It's gone straight up, but it's registering technical excesses from which a very worthwhile correction can follow. So what we want to see here now is that all the positive conclusions from a pro-business administration, are they in the market? The next question is, how long will it take to get anti-business legislation and rules and regulations out of the system and actual pro-business rules and regulations in? And sure, Trump has said, lowering tax rates hugely. A 15% level is talked about. And I should also mention you want to keep on the theme that tax rates will be cut. It doesn't mean to say that the amount of tax revenues collected by the government will diminish, because you have the Laffer curve that as you raise taxes too high, you kill the economy, and also you get tax avoidance, so less revenues come in. So this is very constructive, and also getting rid of a whole lot of rules and regulations. I mean, small businesses, it just takes such a large portion of their time and effort just doing the paperwork. So it is very constructive, but you have an opposition out there which has been in power for decades and decades, one could even say generations. And as we see with some of the hysterics and dreaming up reasons why Hillary lost, like Russian intervention, which is, I think, not proven, they will fight against every change as best they can. And there could be many delaying things involved. And yes, the administration and most of the Republican Party will be for change, but it'll take a while. So in the meantime, you've got an overbought stock market. Many sectors, even the small caps, are up there. It's been fabulous. And with the election, our view was to really discuss the changes to a pro-business regime. It's going to take a long time. So let's just monitor the markets for overbought or oversold. And we've ended up with some very strong overbought conditions, from which we can watch for a noticeable correction. You also have on the small caps as a tendency to help the markets up through into the first part of January. That positive element in the financial markets after that is no longer effective. So there's a number of things that are very strong in the financial markets now that are eligible for correction. Now, the other one is going the other way, is that long treasuries, the bond future, got really beat up. I mean, that was a tremendous hit to the bond markets. Also, that was there was a rise in European 10-year stuff as well. So, and you also had an increase in shorter maturities, like LIBOR increased. And with the sell-off in the long bond, you had a tremendous steepening of the curve, which in turn really helped the bank stocks. So everything's up there for a change. And now with the long-dated treasuries, they seem to be trying to stabilize after becoming oversold. And when it became really oversold a couple of weeks ago, the advice was, let this thing build a base before taking a position in long bonds. So we're doing that now. On the positive side, to visit there again, the low-grade bonds, junk, high yield, whatever you want to call it, have been declining in interest rates right through since June. So you've had long-dated treasuries increasing in yield, and you've had low-grade stuff decreasing in yield, which is narrowing credit spreads relentlessly. This has been incredible because last year at this time you had very weak crude oil prices and very weak junk bond prices, so that spreads were widening right into a crisis that ended in late January, early February. And you now have the opposite condition, really, really strong sentiment for low-grade stuff, and this is always dangerous. But we're waiting to see what kind of technical signals we can get out of it. 5 weeks ago on the spreads, we had quite overbought well, actually narrowing, so you can say underbought. Anyways, it was reaching technical excess, and then it paused for a while, and it resumed. So it's one of these relentless moves that just go and go and go. And, of course, part of it is that through the summer, the European Central Bank was buying corporates in Europe, creating a shortage there, just sucked them out of the market. That would help U.S. corporates. Then you had the positive wave going through, which would help U.S. corporates. And you had more of a plus out of GDP than anybody thought, so that was helping. And then now you've got the prospect of a pro-business administration, and lower tax rates is going to really help the prospects for corporate bonds. So everything's wonderful, and we're watching for some kind of a technical reading on narrowing credit spreads and declining yields for low-grade stuff. And markets are markets, Jim. They'll eventually show us one way or the other that a reversal is coming, and hopefully we're onto it when it happens.
We'll have more with Bob Hoye right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're chatting with Bob Hoye. Bob, the U.S. Fed hiking its rate for the second time in 14 years. Doesn't sound like a big deal, but they say they plan to do it 3 more times in the new year. Will Canadian banks have to boost their rates just to stay competitive?
Oh, yeah, they will. But, you know, this business of the Fed Open Market Committee getting together and deciding to raise rates this week, this is so much nonsense. I can't believe it. You know, first part of the show we were talking that rates have been going up since June. And so the Fed had no alternative but to follow. Now, if you take a look, going back 100 years, at times of major changes in interest rates, either up or down, the history of the Federal Reserve with their adjustments of the administered rate is they follow the change in market rates by 4, 5, 6 months. So here you are. I can get into a philosophical discussion on this one, is that the street thinks that interest rates went up in anticipation of the Fed raising rates. I say that in watching, the long bond get overbought and rates going up afterwards, and watching, say, LIBOR, a market short-term rate of interest, been going up since June, that it's like all of the history of the Federal Reserve. It follows the increases in market rates of interest. And my God, it's really pathetic to see how so many otherwise intelligent people sit there and hang their opinions on the thoughts of what the Fed might do, when all of history points out that the Fed follows market rates anyway. So there's no point even watching the Federal Reserve other than for amusement's sake. So, yeah, and then they're just guessing, because they don't have a good forecasting model, that they would increase rates a couple of times during next year. Well, we don't know that yet. All we know is that there is a trend of rising rates for long-dated treasuries, and there's a trend of rising short rates. And as yet, the low-grade junk stuff has yet to turn to increasing rates, but that will happen at some time. And of course, then what happens? You get over to the discussion of what happens to interest rates and the price of gold, for example, and also with the U.S. dollar. And here again, the popular view is that the rising rates firms the dollar, and that puts gold down. Yeah, but the rates have been rising, but the main thing is that the U.S. dollar has been in a chart pattern that says up. And yes, a number of weeks ago, when it was breaking through 100 on the DX, was the key breakout. But at 102, there was some congestion on the chart where it would correct for a while, which it did. And then it was important that the breakout through 102 would occur. And as it occurred, then our target becomes 112. So that's not going to help gold, nor will it help silver. And it's the rising dollar is on its own. I don't think it has too much to do with the difference in interest rates between Canada and Europe, or currencies between Canada and Europe. It's just in the chart. Now, also, historically, in a post-bubble contraction, the senior currency has a tendency to be firm relative to most other currencies and most commodities for most of the time. So you have that going on, and then if you have a change in administration, that it will probably urge the central bank to be responsible rather than reckless, you're going to have a continuation of the firming dollar. Also, you've got the fact that if, with rising interest rates around the world, the party in the bond market is over, so then it'll shift to where people who have borrowed money out of New York have to service that debt into New York, meaning they got to sell somebody else's currency or their own currency in order to get their hands on U.S. dollars to service their debt obligations in New York. So this is part of the reason why you can have a stronger dollar. And so that says we're not particularly bullish on the precious metal themselves, gold and silver. But we can get bullish again on the precious metal stock, particularly the golds, because what happens in a post-bubble contraction is that the real price for gold goes up as price of base metals or energy costs go down, and that improves their operating margins, and that's really what you want to know. So investors will be looking at the gold shares, and at some time here in the next while we may get another buy on them. We're looking for it, always looking for the opportunity. We had the sell on them in July when the technicals were very excessive and called for a significant correction. It's turned out to be a significant decline, but I'm sure that our technical work will get the bottom on it when it arrives. But generally, we're in a cyclical bull market for the gold shares based upon improving earnings. And, hey, that's investing. So, long term, we like the sector.
Bob, what's your opinion of the BC government coming up with this $37,500 interest-free loan for new home buyers?
Well, I guess when they came out with the law that really hit foreign investors with a 15% surtax of some kind, that was bad law, and it was in response to a hysterical market in Vancouver houses. And actually, the regulation came in after the house prices had made a peak. I think May was the peak. So then that was a tremendous fast drop in prices for higher-end houses. And but then maybe they wanted to try and help out those buying a house. But while the house prices averages may have come down, they're still exceptionally expensive relative to the cost of owning one. So our advice in the summer was that people should lock in their low interest rate mortgages, at least one thing to do. And this one, it's probably politically savvy, helping people ostensibly probably is, but one should recognize that house prices in Vancouver are unusually high.
Well, I'm kind of looking at it as they've just put a bigger piece of cheese in the mousetrap because you still have to pay this debt. And after 5 years, they start charging interest on it. And for the taxpayer, it's going to cost them $140 million to administer this program. Why should I, as a taxpayer, have to help somebody buy a house?
Right. Good, very good point, Jim.
Also, with a 7% commission charged roughly on $37,000, that means the real estate agent gets an extra $2,600. Is that a bribe to the real estate industry?
Yep. Yeah, you've looked at it very thoroughly.
Yeah, well, is it my guess that there might be an election, say, around May 9th in BC?
Yeah, well, there actually is. So, yeah, but you don't want the socialist hordes in either, so what can you do?
Oh, I know. Well, hey, at least we don't have the horrible choices they had to make in the U.S.
Yeah, but it certainly was a fun election to watch in the U.S., and it'll be fun transition to the new administration. The left is, as the saying goes now, it's they're setting their hair on fire. They're so upset. So
Bob?
We'll watch it, Jim.
Well, apparently the Vancouver area is about to get pasted with another snowstorm. And for the rest of Canada who's laughing at us, we haven't had any major snow for over 1,000 days.
Yeah.
So, for once, we'll have to wear our Olympic toques and bright red mittens again.
Yeah, but the physicist side of me, on this one where the eastern and prairie provinces look at traffic snarled up in Vancouver, but I would point out whether you are in Toronto, Montreal, or Winnipeg, or Vancouver, when the first snow arrives and it's close to the temperature of freezing, the coefficient of friction is 0, whether you are in Vancouver, Winnipeg, or Toronto. So it's as problematic most anywhere, but they take a delight in Vancouverites struggling with snow in their cars. But I had to point out to my sister, who lives in Ontario, the other day, that many Vancouverites ski, in which case you got a lot of experience on the Whistler Road, which from time to time can have snow on it. So let them freeze in the dark.
And also, if you're stuck in traffic in Vancouver, the mountains look beautiful.
Yes, thank you.
Nice scenery. Bob, thanks a lot for chatting with us.
Yeah, Jim, good to be with you. We've had some fun today.
My guest has been market historian Bob Hoye. He's the chief investment strategist for institutionaladvisors.com. You're listening to HowStreet.com radio. Yes, you can find us on Twitter at TalkDigitalNet. If you like YouTube, you can find us at Talk Digital Network. If you have any questions for Bob, you can send them to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.